Welcome to Cambridge House Live. I'm Bridgitte Anderson. We are at the Canadian Investor Conference Vancouver, and I am joined by Don Campbell, the Senior Analyst with Real Estate Investment Network. Nice to see you.
Thanks for having me.
Let's talk about the Canadian real estate market to begin with. How healthy is it?
Well, that's a really interesting question because it's like saying, what's the temperature of everybody in the hospital? You know, some people have fever and some people are too cold. So what we're finding is that it's really regional right now. And if you're going out east, the market's not as healthy as it is out west.
And how has that changed over the last several years?
Well, several years, what we're seeing is the strength and the job migration and the population migration is all growing out west. So the actual economy in Canada is shifting west, and therefore the housing demand is shifting west. But unfortunately out east, the market values keep going up and keep going up. And that's where the problems are going to eventually occur versus out west.
Well, and some people would say out west that we are facing a bubble. Would you agree with that?
I would not agree with that in most cases. But you remember, I'm a technical analyst, so I like to look at the underlying economics of the support behind the market. So if you're looking at a Dawson Creek or Fort St. John, and in that area where the population is really strong, no bubble. But if you're starting to look at some other areas in the province, especially British Columbia, where the values keep going up and up and up, but there's no underpinnings, that's where you're going to have an issue for sure.
Okay, I want to just back up for a minute because you talked about northern BC, and a lot of what is happening there is driven by what's going on in the LNG market. So is that also one of the factors that play at real estate?
Sure, absolutely. You know, a lot of real estate, people who obsess about real estate look at average sale prices and number of days on market and all these real estate specific things. But if you want to be strategic and you want to actually reduce the risk, what you do is you start back at GDP, job growth and population growth, which is going to give you an 18 to 24 month forecast window on the real estate market. So yes, the LNG, Site C dam, any of that exploration, including oil up in that quadrant, is all actually driving the job growth, therefore the housing demand.
Now, what about province by province comparison? You're the author of a new book that's out called The Secrets of the Canadian Real Estate Cycle. So moving away from British Columbia, how does the rest of the country stack up?
Wow, I'll tell you, if we start out east, you know, you've seen at Halifax with this shipbuilding project that's going on there, $12 billion pouring into that market. That market's going to stabilize between now and 2016 and then really start to take off. New Brunswick, the same idea. Moncton, you're starting to see a rollout and some refinery issues that are going on there, bringing jobs in. Some of the other maritime, not so much. But if we get into Montreal, you're seeing a political risk issue that's in there that's going to keep a cap on that market.
Oh, even still?
Absolutely. Yeah, and no matter what happens, there's always that international risk when people are looking in going, but the flag can change from left to right at any moment in that province. And therefore, there's a financial risk, therefore leading into a real estate risk.
And is it still really, is Alberta still really where there's a lot of great buys? I mean, there's a lot of, obviously, oil and gas investment going on in that province, continues to go on.
And it's not just oil and gas. You know, you're seeing both the airports being improved by another $1 billion, therefore bringing in the jobs. You're seeing the in-migration. Alberta grew by more last year than it has in the previous 20 years each year. So it's really, really driven by the job growth, population growth, and you still have unemployment down in the 4% range. So that means people have money to support the real estate market. So I like the buys there, but they're getting pretty hot, tough to get the good deals.
Well, so that's my next question then, is what do investors need to do? Where do they need to go to find these great buys?
Well, first off, there's no question what you need now in those hotter markets is a relationship with somebody very good who understands that market. It could be your realtor, it could be your local mortgage broker, somebody who's a professional in that market who can lead you in that direction, of which I'm not one of those. I'm an analyst, just not selling anything here. But at the same time, you do have to understand that the job growth and the population growth is everything. If it's in Saskatchewan, for instance, you're seeing a lot of speculation going on in the northern half of the province, but the jobs aren't really pouring in. So you can get the deals there, but they're higher risk. In Edmonton, Calgary, Red Deer, you're seeing consistent growth. They're not overbuilding, so there's a increased supply, decreased supply, increased demand, and no vacancy. So there's no room at the inn, so to speak.
Now, what about in Vancouver? There's a lot of speculation
Yes.
about what's been happening in Vancouver for, 15, 20 years. And now Vancouver looks to be positioning itself as one of these ultra prime real estate markets, comparing or maybe in competition with London and Singapore and New York City. Do you think Vancouver is at that place that it can position itself like that?
I think you could attempt to position yourself. I think that the trend that we're going to call it in Vancouver is more of a capital sanctuary trend, where people are parking their money here. But we're not Vancouver. Let's be realistic. We're not London. We're not New York. We're not LA. We're not of that size. We're a million people. So there's very limited amount of real estate and lots of capital. Therefore, the higher end properties are really, the cap rates are dropping down 3.5%.
Well, how much is that factor then driving prices, where people from around the world are looking for a safe haven for their funds? And so that does seem to be a factor in driving the prices here. Would you agree with that? I
would agree that it is driving the factor in the commercial world for sure. The towers for sure, the malls, the shopping malls for sure. But in the residential side, it's driving the $1.5 million and above properties. It's not really driving the condo market. And if you take the $1.5 million properties out of the equation, that it's still incredibly fairly affordable versus the rest of the country.
Yet there is this backlash about foreign ownership right across Canada.
Oh, yeah. And you know what? There are no stats to prove that it even exists. That's just the way that Canada works. We don't have that information. But if you're on the street, you can actually see, and if you're in the selling world, you can actually see the foreign investors who are coming in. But let's be realistic. They're not coming in here buying a condo and then just leaving it blank. They say that in Toronto. We're seeing the majority of the foreign investment funds coming into the commercial market and the higher end residential market.
So Don, what advice would you give to investors looking for real estate opportunities in Canada?
Oh, stop reading anything. No. Realistically, is stop looking where everybody's looking, which is the housing average sale prices and, oh my goodness, the Canadian national debt and those types of issues, and start looking back where the GDP growth is. Where's the GDP growth regionally? Where are the jobs going to be? And if you've got GDP growth and you've got jobs, you have stability, and that's where your real estate market's going to be great. You don't have to invest where you live.
Okay, that's some great advice, Don.
Thanks
very much.
Thank you.